and welcome back to Timothy series. I'm Alanre, your trusted real estate consultant.
I'm Danielle Ramos, your mortgage consultant.
And I am Larry Coleman, your credit expert.
Awesome. So like we've been doing all series long, we try to have interviews with leading experts in the field. And today we have one of the best credit maestros, Mr. Larry Coleman, and we're going to pick his brain, talk to him a little bit about credit, and see what he can give our viewers.
Perfect. Yeah. I'm excited. Credit is so important.
It is definitely important.
Yeah. So Larry, could you touch a little bit, what is a credit file? Just tell us a little bit about credit.
Well, a credit file is something that establishes your payment history, what type of accounts that you have created or you have entered into an agreement with a bank, furniture place. It's created when you simply fill out an application. They run your Social Security and they run it to the bureaus, and the bureaus sends back information to the creditors saying what you have done or established on yourself with credit. And once you do that, so say a person 18 and they applies for their first, if it's anything that has to apply with pulling your credit,
yeah,
it will create a credit file for them. So if they went to go rent an apartment and they tried to run their credit, it created a credit file.
Interesting. All right. Sounds good. Awesome.
Perfect. So should we start with the credit report when we run a credit report?
You should always, anytime the credit report it says a lot about the habits of how we handle credit. So it's an important tool for the financial industry to say, are you wanted to be able to handle the credit that we're going to give you? What has your history shown us that you could do when we do give you this type of credit? So
that's good. Awesome. All right. So I know you spoke about credit files and running credits and applying. Can you talk a little bit about or what's the importance of having accurate information on your credit report?
Yes, it's definitely. So there's studies that 1 in 5 people have errors on their credit report. So that is definitely can be damaging to your credit score. You could have people with merged files where 2 people's credit files are on somebody's credit report, 2 different people, names are wrong on there, accounts that don't belong to you on there. So it's very important that you have an accurate credit file. Definitely accurate.
So if the name is inaccurate, that can actually affect your score.
Yeah, it's because credit bureaus communicate with each other. Your name could have a negative impact on what your score is. It's not a big score. It may be 5 to 10 points somewhere in there. But because if your name is say John Doe on TransUnion, John Michael Doe on Experian, and then John M. Doe, there's 3 different credit bureaus, 3 different names. So because they communicate, they may ding you between 5 to 10 points because of that.
And that actually can be huge. I mean, sometimes we just need that 5 or 10 points for certain loan programs. So that can be huge for someone.
Yes, it's true. Yes, it's definitely important to screen your credit report from top to bottom.
Yeah.
Don't skip a section. Some people may just go to the utilization. Some people may skip and look at what's negative on their credit report. But there's so many different things that you should be looking at on your credit report. And the best way to look at one is from the top and then work it down all the way to the bottom.
Nice.
Exactly. Because of you, Larry, I do that all the time. I send the credit report to my client and I ask them to review everything on there to make sure that nothing varies. So that's good information.
Yeah, it's definitely, and you should always tell your clients, you know, and I know you do this too, Danielle, because you talk about it, ask them, what is this? What is that? Do you understand why is this? So yeah, it's definitely important that you understand what's on your credit report, and to understand how it could be impacting your score.
Right. I mean, there's basic stuff we know. If we are late on our payments, that's going to be negative. What else did we want to touch on, Alonre?
I know you said something about utilization. You want to go further, expand on that a little bit?
Well, utilization is a part of your revolving credit, so it could be any kind of credit cards that you have. This is credit that it continually revolves. You use it, you pay it, you use it, you pay it. Standard, the best scores come if you keep a 10% or less utilization. Standard, the industry standards say if you keep 30%, you know, try to stay under 30%. But the best impact to your score is if you keep it under 10%. Some people even say you should keep it under 5% to get your best score. But utilization is, you have a credit card, it's got a $500 limit. And then if you're using $400, then you're going to have a high utilization. So you definitely want to keep those credit cards down. And there's other factors, you know, that we'll talk about later, how it impacts with interest, you know, the amount of money you're paying on these credit cards. So, but utilization is 30% of your FICO score.
That's huge.
Yes. And the other big thing is, you know, payment history. That's 35% of your score. So just imagine if you have high utilization and you have late payments, that could be 65% of your score.
Wow.
So just think that's 2/3 of your score. So that can drastically drop your score 100 to 150 points, determining how much utilization and how many late payments you have. So say a person has $10,000 in credit and they're using 9,000 of it, and then they have, say, 10 late payments in the last year. I mean, their score can literally drop 150 points just from those two things.
Interesting. Wow. So I know, Danielle, I know it sounds like utilization is very similar to what you do, to what you use, right? The DTIs.
Oh, definitely. Well, yes, the debt to income ratio. So that is, that's definitely important. What you were touching on for the utilization on a credit report, though. Yeah. So we want to make sure that you have a lot of available credit to you, but you're not using it and abusing it.
Exactly. Yeah.
It's definitely important to understand that as on my side, the way I communicate with my clients, for them to get, because sometimes when I'm talking to my clients, they're not, some of their philosophies are different. They'll say, well, shouldn't you think they would want to give me credit? And I'm like, well, just take this analysis. You give me $100 and I never pay you back. And 3 months later, I come and ask you for $100 again. Are you going to give me that $100? And every client I have say, nope. So that's how the financial industry looks. It is a tool for them to understand what you do as an individual, a consumer, and how you handle responsibilities when it comes to money. So
Right.
that's what gauges your score. What are the risks for us to loan? If you have a 750, the industry looks at you as, hey, this is a low risk borrower. If you got a 550, they look at you as you're a high risk borrower. So at that time, either you're going to get denied or you're going to get an interest rate that's really out this world that can ultimately change where you live too, just because the amount of interest you're paying on that loan.
Right. What else could we touch on the credit report?
The other things you want to talk about is a mixture of credit. That's 10% of your score. So when your credit is mixed, so if you have revolving, you have a mortgage, and you have a revolving, installment, and a mortgage, that is a complete credit report. So by having that, you'll have a higher credit score because you have a well-rounded credit, meaning you could maintain revolving credit. Your revolving credit is less than 30%. You're never late, right? And then you have installment loans, so you can make monthly payments on installment loans on time. And then you have a mortgage, and mortgage is typically a higher payment. So if you have all those things, you're considered to have a complete credit report. If you've only had one, you still need to work on the other areas to make you more of an attractable person, attractable borrower.
Good stuff.
Yeah.
Should we touch on some tips that people can do?
The first thing I always tell my clients is, let's look at what's reporting negatively on your credit report, and is it inaccurate? You hear some industries saying that they could just remove whatever's on there. I tell clients that, that's misleading, because the Fair Credit Reporting Act says if it is accurate, then it should be reported, right? So because 1 in 5 people have inaccurate information on their credit report, that's where I come in. So my job is to identify those inaccuracies, challenge them, and say, hey, this is inaccurate. So you have two choices. You need to correct the inaccuracy, or you need to remove it from the credit report. So the tips in that is just really trying to find an inaccuracy on there. One that I always look for in late payments is you may have TransUnion saying a person was 30 days late, but Experian said it wasn't late that month. And then Equifax said it was 60 days late in the same month. So that's inaccurate. They can't do all three. So somebody, either the credit bureaus are not reporting it correct, or the creditor is not reporting it. So there's two things you can do in that instance. You also can take that, you can dispute it with the credit bureau, and also dispute it with the creditor and say, listen, you're reporting that I was okay, but this credit bureau is saying I was 30 days late. This is saying I was 60 days late. That's inaccurate. Can you please update my credit report? And they are supposed to update, because it's their responsibility to have accurate information reporting by the Fair Credit Reporting Act. Other tips is collections. I'm big on collections. That's a whole nother topic. That's a passion of mine about collections and how to get collections removed and how they operate and all that type of stuff. So maybe the next time we can have just a class just to talk about collections.
Yeah, just one on that, because I know that is a big one, and of course you're very skilled in that. Yeah, there's a lot of steps involved.
Right.
Yeah, so I guess on the next one of the next videos we do, we'll definitely tag it collections. Yeah.
Right. Yeah, that's a big topic for me. It's a strong area that I like to emphasize on, and I've got many collections removed, medical collections, debt collections, and then I even have strategies that I use. I use a strategy called a restrictive endorsement letter to negotiate the removal of those debts from the collection companies.
Okay.
And create the client's terms and conditions for them to cash a check to pay off that debt. It's a simple letter, but it's a very powerful letter because once you create the terms and conditions on that check and they cash it, they have accepted your terms and conditions. Nice. So they have to remove it from your credit report. Collection companies, they're be honest with you, they're money hungry. So most cases, if you dangle some money in their face, they're gonna snag it and take it. Banks don't accept restrictive endorsement letters. They will send it back to you and say, we don't accept those. But collection companies, because they bought that debt for pennies on the dollar, they're gonna take that money. I've had plenty of them removed using that letter. So it's definitely a powerful letter. So, but those are good tips. Work on your utilization. Make sure you're on time in your payments. Try to find negative indicators on your credit report. If you, I tell all my clients, before you pay any debt collection, you should be negotiating the removal of that off your credit report. You don't want negative indicators to stay on your credit report. It doesn't make a difference if it's paid or how old it is. The financial industry is going to find a reason to charge you higher interest. Even though that's an old collection, you could have a 700, and that one collection could change you from being able to get the best interest rate. Just because it's a negative indicator, it shows that at one time you defaulted on a loan. So I tell all my clients the objective is to remove as much of the negative information as possible. Do not create any new negative information, and it eventually will fall off. And late payments, for a lot of people, after 2 years, they don't really hold a score value after 2 years. That's why when you look at your credit report, it's just usually have a 2-year payment history. After the 2 years, it really doesn't hold a score value. But I'm assuming in Danielle's industry, she may look and say, well, you've been late. It may affect if you get approved for a mortgage or not, just because they go further back than just 2 years. So, but how do y'all do that, Danielle? For a person that maybe have late payments older than 2 years, does it affect them getting a mortgage?
We go off of the credit report and what's reporting on there. Definitely mortgage lates come into play in different financing programs, and other late payments usually just come into play with their FICO scores. If auto loan credit card was paid late in the past, that's going to affect their FICO score, which affects what financing they can get, programs and rates.
Well, I know it's just important that they understand that those late payments and utilization are, most people I look at their credit, there's 3 things that kill them: late payments, utilization, and collections. Those are the killers of your credit report. And to be honest with you, collections are the easiest thing to get removed if you're dedicated and you want to get it done. Late payments are the hardest. They are the hardest to get fixed. You really have to deal with the creditor and the credit bureaus. And there's other little indicators that are reported negative. Say you paid a debt, but they're still reporting it as derogatory, but it is paid. But they still have a derogatory indicator. You should get that removed and have it changed on your account status as paid. Now, it may say on the account status that it was a collection. That will stay, but that account is no longer derogatory. It's been a paid account.
Mm-hmm.
Another inaccuracy, it could be that account is paid and they're still reporting it 60 days late, 90 days late, 120 days late. They're not supposed to be doing that. Another inaccuracy is a collection company having that you're 120 days late on a collection. Collection companies can't do that.
Really?
So that's another thing that's an inaccuracy. They can say that this is what you owe, the open date, the activity date, or if you had made a payment, what's your last payment, but they can't report that you were 120 days late on a loan that you never entered into an agreement with them. They purchased that debt.
That's actually news to me. Okay.
Yeah, they purchased that debt, but I didn't enter into an agreement for them to do that.
That makes sense.
Yeah. The other thing that a lot of people you don't hear in the industry talk about is Metro 2. Metro 2 is the standard guideline for creditors or how they're supposed to report to the credit bureaus. So when you understand Metro 2, you can understand when there are reporting inaccurate information on your credit report, because it's the guideline on how they are supposed to put the codes in for your credit, for whatever thing you did with that credit. There are codes there. Metro 2 has the guidelines for that. So by understanding Metro 2, you can understand a lot of things that they're doing wrong out there. The credit bureaus hate credit repair companies just because we're always on top of them. You know, this is wrong, this is wrong, this is wrong. So, but you should definitely, I tell people, treat your credit like a heartbeat, because it can change your life.
Nice. I like that tagline. That's really cool.
Yeah.
Lots of great information. Thank you, Larry.
Yeah, no problem. I mean, that we can have just break down classes and just talk about certain things on one little area of a credit report. We can always break that down. We could talk about what do I tell my clients to build their credit. You may have some negative stuff that's accurate, right? It's not coming off until 7 years. So what does a client do to continue to build on his credit? You can overshadow negative information with abundance of positive information. So long as you continue to build, continue to grow, continue to keep utilization down, continue to increase your available credit and how much credit that you have. I tell people, don't be afraid of credit. It's actually your friend. It may come in a time when you most need it, because it'll keep you from making a lot of other bad financial decisions because you don't have credit. For instance, somebody don't have credit and then they go get a payday loan, right? So then they got to pay that payday loan back in 2 weeks, and then they don't pay it back. They only pay the finance charges, and then they turn around and and then that loan continues to grow, and then they're charging you 300% interest, right? So next thing you know, you got a $200 payday loan, and the time you actually paid it off, they got $800 out of it. So those little tips right there. If you had a credit card and you had good credit, you could have did all that and then paid that stuff back off without getting charged 300% interest. Maybe you have a credit card that's only charging you 17% interest, right? So credit has a lot to do with, it can have a major effect on your financial status if you just abuse it or you just don't want any of it, you know.
Mm-hmm.
Interesting. Well, lots of goodies. Thank you very, very much, Larry. We appreciate you coming on the show. We definitely will have other series where we will discuss go more in depth into about collections and your process and how you deal with all these items and what you can do for people that need your help. Right. Anything else that you want to add? Or we looking good with this?
Loved all of that information, and I look forward to giving more out in the future to our clients. I mean, it's great for me. This is what I love to be able to help clients get to full potential. So it's great.
Yeah. So again, Larry, thank you very much for coming. And what'd you say?
I said thank you for having me.
Definitely. Like I said, we'll do some more. We love you so much. I mean, you've always helped out. And many times we have, clients that we get stuck with, we know to call. So we definitely make more things happen. But hey guys, thanks a lot for watching. If you have any questions, comments, just feel free to give us a call, send us an email, text, whatever it is. You have our contact information. And we'll definitely be back next week, talking to you guys again. So signing out, this is Orlando, your trusted real estate consultant.
Bye, guys.
Bye.